Hello traders, Gary Wagner here, just before 10:30 in Honolulu, 4:30 in New York. It is Wednesday, September 21st, 2016, and this is the Daily Report for Gold and Silver. Following the conclusion of this month's FOMC meeting, in which the announcement came out that interest rates would remain the same, we would not see a rate hike, we saw the precious metals on a second leg of a fiery move to the upside. First leg came really last night with policy decisions that were made by the Bank of Japan. Net result, we've got about an $18 rise in the price of gold. We're going to first start by looking at spot. Spot's trading at $13.33 and change, traded to a low of $13.07 and a high of $13.35. When we take a look at COMEX, and we did make recommendations to enter long positions in both gold and silver. We'll get to that as soon as we pull up our first chart. $13.37, that's COMEX, up about $19 on the day. Low $13.10, high $13.39. So we're just a couple of dollars off the high. Net change in gold about 1.5%, but that's dwarfed by what we're seeing in silver. Silver up over 3% on the day. First, we'll look at COMEX futures at 19.89, putting it up about 61 cents. As I said, a 3% gain on the day. The low 19.07 and the high 19.95. And lastly, we'll want to look at what we call spot silver. Spot silver's at 19.79.6, up 60 cents. Again, a 3% rise on the day. We took a risk by actually placing our positions on yesterday before the announcement was made. But I felt comfortable with that risk in that the basic consensus was that we had a very, very low probability of a rate hike in September. That, coupled with the fact that we saw a lot of premium decline in the market following a jobs report last month. So my sense was that if it came out with no rate hike, we would see a lot of that premium move back into the market. That's exactly what we saw today. Let's take a look at our first chart and discuss our current trade. So traders, quite a nice move that we saw today. Across the board, pretty much all commodities, of course, dollar was down, but we had gold and silver trading tremendously higher, about 1.5% gain in gold, 3% in silver. First, let's take a look at our gold chart and talk about our current trades. We did enter long positions in gold yesterday. If you are trading COMEX, you got in roughly at 13.17. If you're trading Forex or spot, you got in roughly at 13.14. Our recommendation was to place stops below 13.05. That would be basis December COMEX contract. What I'm trying to do, of course, is put it below these lows right down here. Let me get my pointer out. But these lows right down here is what I was attempting to protect us from in case we had some tremendous volatile swings, but at the same time we're correct. In other words, the market came down, but actually recovered. And that's kind of what we saw today. You saw this low here. This low comes in at about 13.10. 13.05 was kind of our line in the sand because my sense is if we would have broken through this price point, it would have been, I believe, highly probable on a technical basis that we'd see lower pricing. And of course, a break below that point would have meant that we probably got an announcement of a rate hike or something of that nature. Now, we did not, and the market took off. So we're in, as I said, 13.17, stops at 13.05. We will certainly move our stops up over the next couple of days. And then more importantly, what I want to do is to really start to work with our stops and track those as well as our exit strategy, because the last trade we put on, we did make money, but we didn't make the kind of money I had hoped we make, because basically what we saw, and that was right in here, is as this market spiked up, we had this slow and gradual decline. But as you can see, this market pretty much declined till we hit these lows earlier or late last week. And that is really what caused me to believe that we have this true double bottom. We talked about this yesterday. We have historical data in a couple of different price points showing that this is a strong area that we can definitely look for support in the market. And that is, in fact, what we saw. Market spiked up and spiked up aggressively. Now, the second thing I believe that's fairly noteworthy in today's activity, this is not a daily chart, it is a half-a-day chart. And the reason that I put it as a half-a-day chart is I really wanted to break down today's activity so we could see really where the buying came in. And as I said in my opening statement, it really was a two-pronged delivery. One, when the Bank of Japan announced their policy, and that was considered to be bullish on gold. And then, of course, when the Fed did not raise their interest rates, we were already up about $11 at that point, right in this area, before the announcement came out. And that's where we kind of filled out and moved higher to close really at 1337.90. That's where we're at now. 1337.80. That's a 38% retracement. So that's a logical point for it to stop. I don't believe we've stalled here, but I didn't believe we've stalled here either. So the key right now is to see what kind of follow through we get, where this market wants to go, and then most importantly, over the next couple of days, move our stops up and look at our hard-based exit strategy. Let's take a look at silver and our current silver trade. So traders, we also made a recommendation to go long silver. And traders, of course, taking that call got long at 1930. That would be basis COMEX. If you're trading spot, you want to really subtract 9 cents. That's the premium right now to about 1921. We also play stops in order to protect ourselves. And I placed our stop recommendation was really to place them right under these lows right here, which come in roughly at 1878. Now realize that is a ways away from the market now, but we entered the market right here, so we didn't have all of this upside behind us, and it was a protective stop. We will look to raise it up, and we're probably going to look to raise it below this particular price point that comes in around 1940. Now, in terms of upside targets, we are going to be honing in on those over the next couple of days, but simple areas that we are currently looking at, we want to see how it reacts at different tops. This top, of course, here, this top that comes in at about $20.50, and then this high here just below 2100. I'm not really counting these highs that came in here because to me they're over exaggerated. I like to look at the real bodies as points of support and resistance that tend to be most effective. So right now we have our stops right in here. We will look to move them, as I said, somewhere right around here at around 1940 and lock in some profits. That would be the first place we would go. Traders, obviously, maintain your long gold, maintain your long silver. Stops, we will work over the next couple of days to move up. An exit strategy we will be talking about in detail over the next couple of shows. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.